How's it going, everybody? Welcome back. I just wanted to do a quick video on how we caught over 400% on these 516 calls for the 350 play. So the first thing I wanted to go over before we get into the charts and the entry and the exit, etc., is going into today, we were bullish bias. Now, you're going to ask me, why were you so bullish going into today? The first thing I wanted to go over was this bearish fair value gap on the daily chart that got invalidated and inversed on this candle right here on the 3rd of May. You can see the low of this candle being 51.50 and the close of this candle right here at 51.54.75. So after we invalidate this bearish fair value gap, we're going to look for an old high to take out, which is this high right here at this candle on the 15th of April, which is 52.13.25, 52.13 and a quarter. So let's go into Thinkorswim and let's just go into the final 10 minutes of action for the trading day. This is the regular trading hours session on the S&P 500 SPY. I'm trading the 350 market on close algorithm. So the calls that we took were the 516 calls at 6 cents, stop loss at 2 cents. So for the trade, we're risking about 4 cents a contract, which is very, very minimal for an upside gain of, I believe, 35 to 40 cents, which is ridiculous. Contracts ended up going over 1,000%, but I didn't catch the full move. So going into 350, what I always tell everybody is the market is going to look out to take a side of liquidity, whether it being an old high or an old low. Now, in this case, we had already swept lows from this time right here, which is 221. Took out these lows at 514.93 right here, as you can see, and I'll mark this over here. Took out these lows. After taking out lows, we're going to look to take out old highs. The market moves from liquidity pool to liquidity pool. Always remember that. So after taking out the lows, what's our previous old high? Is this high right here at 515.77. Keep that in mind, this 515.77, and we'll mark that right here with a little oval. Now, going into 350, what I'm going to do is I'm going to try to mark a horizontal line. Right, we'll do it right here. We'll just do a straight line up. This is the 350 time, and this is basically algorithm time. Market on close orders come in, lots of volume drives into the market. Usually a lot of moves happen in the last 10 minutes, which you can capitalize on with SPY. So there's the 350 marker. It's not that clean on TOS, but let's get into it. So the entry came at 341, which was this candle right here at 6 cents. Now, I want you guys to focus on the contract chart, and you really have to zoom in for this one. But right here, what do we have? We have a bullish fair value gap, which was respected very, very nicely. I'll mark this with a nice lime green color, and we'll make it a little bit see-through. So let's make this just like that. There's our entry box. Entry came at 6 cents, right around here. Let's mark it over here, 6 cents. Stop loss was under this previous lows at 3. I put the stop loss at 2. Honestly, you could have just risked the whole amount. 6 cents per contract really isn't much risk. Depending upon your account size, it's really not that much risk in an options trade. So when I take these trades, what I also want you to focus on is over here, another level of conviction, which we can zoom into. And I want you to focus on this chart for 1 second. Is here's 350 algorithm time. We have this bullish fair value gap. Let me get rid of these old ones. We have this bullish fair value gap, which I'll highlight as a yellow color. And we'll also make this a little bit see-through. So the first reaction of this 350 candle, it looked to be a full body red candle. I waited for the close for extra confirmation to see if I'd be correct on my trade, which in this instance we were. And I want you to note these equal highs that we had left before the 350 algorithm time. So we had an equal high up here at this candle at 515.76. Now, if you look at this candle previously, 515.77. Those are pretty damn equal for equal highs. So that's a great target for the market to trade into. And at that point, it's all about trailing your stop loss and looking at the contract chart, trimming above old highs on the contract chart. So we have equal highs up here at 28. We have this high up here on this wick at 42. take our entry, stop loss is determined, ride the trend up, trim above the old highs, like I always tell you guys to. Trim here, trim right here in this area, trim at these equal highs. Ultimately, I took my final trim at 39. I was getting a little bit sketched out by this trade, but the trade ended up running from 6 cents entry to 65, which is a little bit over 1,000% in, I believe it was about 10 or 11 minutes. So that's how you could have capitalized on today's trade. The 350 market on close trades are great opportunities for you to risk a very small amount and trail your stop if you're right on the move, and catch a big percentage trade with not a lot of drawdown, and ultimately just ride the trend. Ride the momentum for as long as you possibly can, secure profits along the way, take your trims, and keep upping your stop loss. So I hope this video helped you guys. There's plenty more to come, plenty more alerts to come as well. I appreciate you guys so much, and have a very blessed night. I hope you guys are learning a little something from these recordings. Take care, everybody.